Welcome to the Rebel's Edge, where Pete Najarian and I will break down for you how the market broke down yesterday and why it's breaking up today. All that on the Rebel's Edge. Bang!
There it is. Rock and roll. We know the background. The background's giving it away today.
Yep. In Puerto Rico again. Thank God, because I was up in Newport, Pete, at the Opal Conference, which is a big hedge fund family office thing. It was fun. Although I will say that a lot of you already know what all those finance bros do at things like that. And that is they get stupid drunk. Oh my God, Pete. It was a death march. I was lucky to get out each night at about 1 o'clock or so, and that ain't my style. Not during the week, not when you got to get up at 6. But, it's like they take the leash off, Pete, and these guys just go nuts. And it isn't a big party town, really. I mean, party houses, yeah. But party town, they roll up the carpet on that place pretty early. So, but anyway.
Beautiful part of the world.
It was fun. And then Charles Payne yesterday in New York, that was cool. Charles was great. And he was asking me, he said, so what about volatility? I've been watching you and Pete. You guys are talking about volatility. What about volatility? And I said, if you want volatility tonight, if President Biden says I'm stepping away, you're going to see 30 to 50 tomorrow. Because, I'm not telling people who to vote for, Pete. People vote for who they want. But man, if he stepped away and all of a sudden the shadow government that's been running things is not running things, I'd say we'd have a lot more volatility. But he didn't do that. And today we reversed. And at mid-session, I got the Dow up over 400, Pete.
Woo.
The NASDAQ is only up 0.3%, however, which is, a little worrisome perhaps because they were kicking the living crap out of the NASDAQ. So this ain't much of a dead cat bounce, is it, Pete?
No, the NASDAQ certainly isn't, but it's really driven today. It's the Dow, which we don't say that all that often. But you look at IBM, you look at Salesforce, you look at some of these names, John, that are actually kind of going against the grain, so to speak. I mean, because, we're looking at technology, and technology's, it's doing okay today, but it's not massively running. But you've got energy running, industrials running, you've got some of the materials, you've got financials. That's the list of those that are already up over 1%. So we've got a nice move from that, and that's why the Dow is moving the way it is. But it's also why you look over at the NASDAQ and you go, well, it's improving, but it's not as exciting as it normally would be.
Yeah. And we're still holding over 17 for the VIX, Pete. I mean, the VIX went out last night, folks, at 18. Hopefully a few of you were listening when Pete's been talking about you got to buy it when you can, not when you have to. You buy it at 12. You don't freaking sell it at 12. Well, 50 Cent was buying it at 12, Pete. How did those 100,000 options do for him with the VIX popping by almost 50% since then?
Yeah, unbelievable. Yeah, nice. Some guys just have it, and he certainly understands the market's probably, he or she or whoever that is, 50 Cent has got something going on that's really working pretty well for him.
Yes. Well, let's take a look at Macro Minute, Pete. Today I'm going to say the unimpressive earnings from Google and Tesla earlier in the week certainly dented hopes that we're going to live up to the AI hype. We did see, of course, NVIDIA, speaking of AI hope, moving way down from its recent highs. NVIDIA, folks, peaked at 141, nearly, was actually 141.76. I mean, 140.76, sorry. So right at about 141. It closed last night at 114.25. It is holding below 115 right now. That is a butt kicking, Pete, for, one of, well, not just one of, the biggest AI stock on earth.
Yeah. certainly people get wrapped up in the whole AI. We've all been watching this for basically this year so far. And now we're seeing a little bit of that coming unglued to some degree. And we'll see if that continues. Everybody's talked about this rotation. That's the rotation they're talking about, out of there and over towards, well, maybe the IWM or maybe just some other areas that are a little less risky. That all being said, John, I'm looking at PCE as my macro because I brought it up yesterday. I'm bringing it up again. When the Fed says what their most important gauge is, and they tell us that, I think it's something you want to pay attention to. And we're going to hear from the folks with the PCE tomorrow. So that'll be pretty interesting, and we'll see how that affects the markets.
Well, and into that PCE report, folks, the 10-year bond, the yield is 4.233 right now. So when we come back on air with you Monday, we'll see exactly. You'll be able to see it tomorrow, of course, but we only do the show Monday, Tuesday, Wednesday, Thursday. And Pete and I, speaking of which, are going to be in Vegas next week. We are keynoting the Traders Expo and the Money Show. So that'll be interesting for sure. And we're hosting a big poker tournament out there too, I guess, Pete.
That'll be fun. I was hoping for roulette, but I'll do poker.
As far as fantastic futures, Pete, I'm going to go right with Ethereum, Bitcoin, and gold because they are alternative assets that people pile into when they're worried. And not only did the VIX come down, but all three of those came down because yesterday they were in high demand because, I didn't think the world was going to end, but some people were really, stockpiling guns and ammunition yesterday, Pete, thinking, what if the president, steps aside, not just doesn't run, but what if he steps aside? Didn't happen. And so Ethereum, Bitcoin, gold, all traded to the downside.
Yeah, precious metals, John, all hit the target on the dunk tank, and they've all just absolutely fallen down like I've never seen into the dunk tank. When you look at gold, a week ago, it was almost at 2,500. Here we are under, let's call it 2,365, somewhere close to there. Silver was 3,160. Today, sitting there somewhere closer to 28. They absolutely got hammered. And I'd also like to just point for 1 second towards the VIX. As we talk about volatility all the time, you talked about it. Today, we got as high as 19, actually a little bit above 19. And now we've slipped all the way back into the mid-16, 1670 right now, 77, somewhere close to that. So a lot going on within the markets. You can understand why it's moving around the way it is. The volatility should. And as you mentioned, 50 Cent hit it again, just like he did not too long ago, or he, she, whoever it is. But that 100,000 of those September 25s, and then they sold the 45s against it. That spread was put on for 40 cents, John.
Wow.
I think they're in the right category right now. And I'm not sure volatility is done running to the upside either.
Well, it's not given back as much as a lot of us thought it might, Pete.
Yeah.
So, Charles, in case you're watching today's show, not out of the woods yet, my friend.
Nope.
All right, let's talk about Ford, Pete. Ford is now down 6% year to date. I mean, this is just a terrible, ugly report. It's down 16% today. Like I say, it's negative on the year. This was a $14 stock just a bit ago, Pete. It closed at $13.70 or so yesterday, nearly 14, and now trading and barely holding on to 11. We did have unusual activity, folks. What does that mean? Well, that means that somebody came in and bought a lot of puts. They paid 30 cents for puts that expire on Friday, tomorrow. As you see there, we told our subscribers earnings $7.24. Yep. Well, how did they do? Well, those 30-cent options went to $2.65. So if you had 10 of those, you invested $300. And today, the $300 is worth $2,600.
Yeah.
How do you like that, Pete?
I like that. I unfortunately missed it, but I like that one a lot. There's so many trades in a day. I'll tell you what, it's absolutely amazing how much volume. We don't talk about that enough sometimes, John, when we're talking about the markets themselves, just the broader sense of it all. But when you look at the volumes that we are seeing on a day in and day out basis, and then the translation over to the UOA, unusual option activity that we cite, It's been absolutely off the charts. My thing about Ford is this. Ford down 17%. Why is that? Well, it doesn't help the fact that those earnings might have been some of the worst I have ever seen. I think they came out with a 47 cents, John. They're only down 35%. I think they were 47 cents. They were looking for 67 cents. That's not very good, is it? I mean, you look at some of the numbers that Ford put up, it was absolutely terrible. And that's with the backdrop of GM, who did well on their earnings. They did well on their revenue. There were some other issues out there. They talked about some of the future and everything else. Stock was up, then it pulled back a little bit. But Ford, I don't think it ever moved to the upside. I think this thing's just been going down, 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 down. And the volumes there are absolutely extraordinary. I mean, they traded 90 million shares, John, I think, or 131 million shares in the first 90 minutes. So
Wow.
Gives you a little bit of an idea. There is some turnover over there in Ford, and a lot of them are just palms out.
Yep. Unfortunately, folks, another one with palms out, but we had unusual put activity in this one as well. And that would be Edwards Lifesciences. EW is the symbol here, folks. And Edwards Lifesciences, heart valves and things like that, because they are in the life science space. But shareholders have lost over $13 billion in one day, Pete. And this isn't a $1 trillion stock. So 13 billion, yeah, that'll leave a mark. This is a drop of 29% in a single session, Pete. We're approaching 14 billion in losses. Basically, Wells Fargo, Stifel, Evercore ISI all took their targets down. And like I say, we had unusual put activity. What does that mean? Well, when you take a look at the puts that they were buying the August 85 puts. So they could have bought another put, but back in June, they said, you know what? Things aren't looking so swell. If you look to the far left side of that screen, folks, it says 611. That's June 11th. They were buying with the stock at 87 bucks, the 85 puts, obviously a little over $2 below the market. Well, those puts blew up into big puts really fast on the move after earnings, right, Pete?
Oh, absolutely. Just slam it. I mean, this is unbelievable how accurate some of the UOA can be at times, and especially what we're seeing today out of Ford and then obviously with EW. This is just amazing. I mean, what they did, John, they disappointed in so many different categories that it's not even worth going through all of them, other than to say, hey, look, they had to cut their guidance. Why did they do that? Well, because the biggest moneymaker that they've got absolutely is getting hammered. So that's not good. That means margins aren't very good either. Matter of fact, margins are dropping to the lowest levels that we've seen in quite a while. And as you said, there's a lot of folks out there that are analysts out there that are following this one. Well, the downgrades are flowing in and the price targets are flowing down because there's a lot of problems that they see into the future of this. And because of that, it's making it a really, really difficult trade for those that are bullish for sure. And the stock is awfully close to those 52-week lows if it hasn't already hit them already, John. It was getting really close, right around that $60 level. So absolutely awful report just about in every category. And unfortunately for EW, it's going to take a while to dig out of this hole.
Yep. Worst earnings in 9 years, folks.
Yeah.
And whenever you hear Pete and I talking about, well, we had unusual activity, meaning that they bought a large amount of calls if it was something that they were betting on upside, or puts if it was something they were betting on downside. You want to learn how to do that? Why not start off with our free book, It's Not an Option.com. You can just grab It's Not an Option.com and you just pay shipping, folks, shipping and handling. That I think it's under 10 bucks. The book, it's 247 pages. Like I say, this is not just a bunch of pictures of graphs and things like that. This is very robust instruction on what you need to know to trade like we trade. And then maybe you'll subscribe as well at marketrebellion.com. Remember, by the way, folks, Pete and I will be not only in Vegas coming up next week, but we've got a big event with Grant Cardone down in Miami, October 9th, 10th, and 11th. We'll be telling you more about that.
Yep.
All right, Pete, let's dive into another healthcare stock, Molina, MOH. Trades higher, significantly higher. This is the opposite of Edwards Lifesciences. In other words, it's not everybody in the healthcare space that's getting killed. Like Pete said, you put up some horrible numbers, you're going to get hurt. Well, this one, they put up great numbers. The stock's up over 15%. Basically, Q2 financial results beat on top and bottom lines. And they reiterated their 24 guidance. They didn't offer higher guidance, but they reiterated the prior guidance. So that's 2 out of 3. If they would have perhaps offered a higher guidance, Pete, maybe the stock would be up 20%. But this is a very nice move out of MOH.
Oh, it's a heck of a move. You're right. I mean, it's absolutely rocketing to the upside today. It's a nice big run. The revenue is projected to be up 17% year over year. Everything that you were just talking about, they crushed the earnings, they crushed the revenue. The cash to debt, John, is only $6.5 billion. So they're in a pretty good spot, I would say, from a financial standpoint. The balance sheet looks absolutely incredible. They did crush in just about every category you can imagine. So we've talked about that throughout this earnings season. There have been multiple companies who have done that. And then there is the list. It's a much smaller list of the companies that have just absolutely struggled, like we were just talking about Edwards Lifesciences. But this name, Molina, these guys have done everything right. Now, the first half of the year wasn't great, but now they're starting to move and they're kicking it into the second half of the year. That means I think they've got a lot more room to travel to get up towards those 52-week highs. They're a ways away right now, but that doesn't mean they can't get there by the end of the year.
Yeah, and Pete, beginning of the year, this was a $670 stock. It's right now $842. So, yeah, it's been a pretty good ride for anybody that's been with this one.
Nice.
All right, let's talk, Pete, for a moment about ServiceNow. Stock is up big today as well. Departure of the company's president and CEO, CJ, that's his nickname, due to policy violations related to hiring practices. At least they're not saying he pumped up the numbers or something like that, Pete. And these numbers were pumped up. They were strong Q2 earnings, and they were also beating revenue expectations by about $30 million. So Canaccord liked it. They maintained a buy. And, you've got a CEO departure. That's how good the earnings were. I don't think they're so much applauding the departure, Pete. They're just happy it wasn't for some of the other reasons that would make them more concerned.
John, I think you're exactly right. I mean, anytime that somebody from the C-suite steps down, especially anytime near earnings or on the date of earnings, that's usually going to be something that's going to affect somebody, and the stock is going to be moving to the downside, most likely, usually. Not the case here. These earnings were absolutely stellar. I mean, that's the one way you can defend yourself against that, John, because I'm taking a look. I'm looking at the free cash flow, $3 billion, cash to debt, about $3 billion. By the way, earnings were up 32% year over year. That sounds pretty good. Revenue was up 22.5% year over year. That sounds pretty good. Subscriptions up 23% year over year. They knocked this thing out of the park, which is why they're at 52-week highs, which is why this thing is flying on a day where the market's been kind of shifting around a little bit, obviously getting more positive. But that's for ServiceNow. It has been absolutely rocking and rolling, and it's continuing to do so. I wouldn't be surprised, John, to see this thing actually have an extension to the run, not just today, but maybe tomorrow, maybe next week. This was a great report.
Yeah, it was, Pete. And just like you say, that's what it takes to overcome something, even though they had their reasons for, of course, pushing the CEO out. It didn't seem to be one of those issues that could come back to bite them, like accounting and so forth. That's a much harder thing to overcome. All right, let's take a look, Pete, at your Vikings, because we have somebody that was offering a little rant here that you might be hearing from Pete on Sunday on his Sports Huddle, WCCO Odyssey app, by the way. Let's take a listen, Pete, and see if indeed he thinks the Vikings are cursed.
Be the one to say it. but I'm afraid this Minnesota Vikings season is cursed. It's only July 24th, but the series of unfortunate events that the Minnesota Vikings have already suffered is stuff you can't make up.
He's right. He's right.
Now, second-year cornerback Mekhi Blackman, who was looking to be a promising piece on this defense, unfortunately tore his ACL today at training camp. This comes after the tragic passing of Kyrie Jackson, and this Vikings cornerback room just got a lot thinner. Not to mention, Jordan Addison will probably be facing a suspension to start the season. And if it's not the start of this season, it's probably the start of next season due to the DUI allegations. I'm usually pretty optimistic about Viking seasons, but honestly, I just want to get through this one with no more injuries, no more off-the-field issues. I just want everyone to stay healthy. Be ready for 2025 when the Vikings are going to make a serious move at winning.
He's given up on this year.
Yeah, well, they might be able to find some corners to step in there, Pete. They might have to trade. What do you think?
Yeah, well, they've done a good job over the years. Well, not too good of a job, because that's been an area where we've drafted and we've got corners that are okay, maybe at best. We really have had a difficult time, but we have drafted quite a few over the years in the secondary. Safeties that were first-round picks that have been hurt, all of that. So I think he's completely correct about all of that, John. I mean, the saga of this whole thing lingers. You've got Kirk Cousins. That's kind of what kicked it all off last year, as he yanked off of his Achilles, and now he's gone. He's in Atlanta. You've got J.J. McCarthy, which is great. Obviously, that's an outstanding thing to have J.J. McCarthy on board. But Jordan Addison getting, his second time basically having a DUI, that's a bit of a problem, I'd say. Kyrie Jackson, unfortunately, had that incredible incident on the highway with the racing and the this and the that, losing his life. That's not a good thing. That guy was a 6'4", 200-pound cornerback, John. You don't find guys like that very often, and unfortunately, he is not a part of the Vikings team. And then, of course, Mekhi Blackman gets out there and ACL in day one. They're doing 7-on-7 in day one, and the guy tears his ACL. I mean, you can't really find too much worse as far as having a curse than that. That all being said, here's the way I view it. The Chicago Bears are loaded. You and I talked about that the other day. We were talking about they've got great receivers. I really like the running back, and obviously you went out, found a great quarterback and a receiver, the whole thing. Green Bay Packers are kind of the same thing. Great draft. They've actually got Jordan Love, seems to be a guy who's in position to be a really top-end quarterback. We'll see how that plays out. They've got Josh Jacobs, the running back from the Raiders, who I think is one of the best running backs in football. Detroit Lions, what else can you say? These guys are loaded. Where do the Vikings stack up, John, in the NFC North? When you look at that, makes me start thinking that the Vikings might be at the very bottom of that whole deal. What do you think?
Well, unfortunately, Pete, it's not like you can't pick up a D2 or even a D1 corner that had a decent career, but nobody has a ton of them. So you're not probably trading for a guy. You're instead having to develop a kid. And I'll be surprised if this doesn't hurt the Vikings, because you and I would both say their Achilles heel has been for years their defense.
Yep.
They can score, but they can't stop people from scoring. And now if you have basically three corners out, that's pretty tough. We'll see whether or not Jordan Love makes that push against the Detroit Lions, and or whether Caleb Williams comes up and does what many of us hope and think that he might do for the Chicago Bears. So, I don't think it's a stretch to say the Vikings might be the bottom of this division.
Yeah, it's going to be tough. It's going to be tough. And I love JJ. I think he's going to be an awesome quarterback for the Vikings. But, like you said, it's really been more about the defense. And is the defense a defense as they lose a couple of different players? How well can they defend against a really good offensive, when you look at the Detroit Lions, pretty damn good with Goff. You can look at Jordan Love, looks pretty damn good. Caleb Williams, we think he's going to be pretty damn good. So they might be ripping up the Vikings on defense, throwing the ball around, and that could be a problem. How about this next one, John? The Mets and the Yankees. Now, I think early in the season, many of us, I'm included, you just basically looked at the Mets. They were struggling. You go, you know what? I don't see it. I don't see how the Mets are going to do anything. They got this high payroll, and yet it's not paying off. Well, it's starting to pay off just a little bit, John, and they are taking on the Yankees in a big way. As a matter of fact, they beat the Yankees 12-3. They had 5 home runs the other day. They've been outscoring a lot of these teams in obscene numbers of late. They've got their bats really going for the Mets. It's been pretty good. They've won 7 of the last 10. And meanwhile, you look over at the Yankees. There's nothing wrong with their record. When you look at just the record, you say, well, they got 60 wins, Pete. What's wrong with that? I would just say, all right, but they lost 3 to Cincinnati. They lost 2 of 3 to Tampa. They did beat Baltimore 2 of 3. They split with Tampa the next time. They've lost 2 now to the Mets. That doesn't sound like a team that's really on fire, does it? It sounds like a team to me that's kind of playing sort of 500 baseball, maybe. But they're just not getting it done the way they were dominant in the first part of the season, for sure. The Yankees looked absolutely unbelievable, unbeatable, but they're starting to look a little bit beatable. So what do you think about this whole New York? Are we going to have a Subway Series, do you think, or not?
Well, the Mets sweeping them this past weekend, Pete, is something that I think some people are reading into that the Mets are that much better than the Yankees. The Yankees could still make a trade here, Pete, and get in position. Like you say, 60 wins doesn't exactly imply, just after the All-Star break, doesn't imply that you're imploding. But to lose to your crosstown rival, and then I'll have to tweet out a video, Pete, of some Mets fans and Yankees fans getting into a big brawl.
Shocker.
Always classic when the fans get into a brawl over a baseball game. But they did, and there's a lot of name calling and all the rest. But I think overall, both teams are good to great, and it just depends on, who gets the hot pitching and the hot hitting, Pete.
Yep.
Because that's the way it works in baseball, and neither one of these guys are out of this.
No, it's good. And they got the big payrolls, but you and I have been talking about this all year. It's amazing how payrolls don't mean it all happens, but it's starting to show up a little bit better each and every. I mean, the Dodgers look pretty damn good. They got a pretty big payroll. The Yankees, pretty damn good. They got a big payroll. The Mets starting to look good with the big payroll. You still got teams out there like Baltimore, so Cleveland, and some of these where they're a fraction of the same sort of money that they're putting out there, and yet they're playing pretty damn good. So it's a fun year, I think, for Major League Baseball.
Yeah, I agree. It's going to be interesting into the playoffs here, especially given those, like you say, monumental $200+ million payrolls that the Mets and Yankees both have, along with the Dodgers. Yep. Remember, folks, you can grab our book if you go to itsnotanoption.com. That's itsnotanoption.com. Grab the book, pick up a few tips, get your strategies down, subscribe at marketrebellion.com. The book's free, shipping's $9 or $10, something like that. So Pete and I will be back Monday at 1 p.m. Eastern time. Bang! Have a great weekend, everybody.
See ya.